All right, ladies and gentlemen, let us begin. How do you do? My name is Seth Julian. I'm the Chief Capital Markets Analyst here at BankSo Trading. We are going to engage in a live trading event based on the non-farm payrolls report. Let me say that we only have one protocol in the room. That is that you are asked to please respond in real time with any questions or statements you may have. If they're not germane to the subject, of course, we'll deal with them offline. But we encourage the questioning act. It's a sign of commitment to the process, and we never derogate or denigrate anybody who has the nerve to ask because we. My name, as I mentioned, is Seth Julian. I'm 66 years old. I've been trading the capital markets for over half a century. And this particular report is the most exciting, fun live event of the monthly calendar. It's a blast. It's always fun. And to be perfectly frank, last quarter has been blah, 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 boom. It's just been really, really exciting and wild. Let's take a look at what the non-farm payroll report is, after all. Take a little walk around there again. I can encourage you to ask questions in real time and be happy to deal with that. Non-farm payroll measures the change in the number of people employed during the previous month, excluding farm workers. Hence the idiotic name of a report by what it isn't. All right, I didn't name it, and that's what you get. Nonetheless, it is the most important economic statistic, economic metric that's output about the world's largest, most robust economy there is. If you were to take one metric, one statistic, one piece of information that you would look at on the chart in the bed in a hospital for a patient to see what the most, for a medical worker to see what the patient's situation is, it would be this. By looking at this, a qualified technician would be able to know whether the patient is going to walk out of the hospital or is a goner. This shows the robustness, the vigor of the American economy, because the American economy is largely driven by retail consumption. Over 70% of the GDP in the United States is accounted for by retail sales. And therefore, the amount of people that have jobs is a crucial input into retail sales. More jobs, more cash in the pocket. More cash in the pocket, the more sales. Now, let's take a look at what's been going on lately. This wacky data point, which throws the rest of the chart out of whack, is, of course, March of 2020, when we lost 20 million jobs. That's 20,000 K is 20 million jobs in one monthly report. Devastating. But we won't go into that. That's ancient history now. We will, however, eviscerate it from the graph, and now we see what the data looks like without that extraordinary outline. We have been hitting around 200 or so thousand jobs added to the economy every month since 2020. This is the sign of tremendous vigor, tremendous power, tremendous growth. And if you doubt that, if you question that particular fact, let's just take a look at the Standard & Poor's, the S&P 500. It has been booming and booming and booming. Doing a little adjustment dance now. Is it going to turn? I don't know. That's a subject for a different discussion. But the price of the value of the stock market in the United States, coupled with the job situation, coupled with the fact that inflation is largely under control, interest rates, despite everybody complaining them being high, they're absolutely at long-term average. This is the average amount that interest rates have been charged for the last, I don't know, century and 120 years, 5.25%. It's the cost of capital. It does not impede these guys doing very well. And it does furthermore allow the banks to profit very nicely. After all, banking is a simple business. Pay her 3% for her deposit, and you charge him 5% for his borrowed money. The spread is the profit margin in banking. That's about the long and the short of it. And when the interest rates are low and next to zero, the banks have a very difficult time making money, as does the economy. But I won't go into that at the moment either. But you get the idea. Conditions are absolutely perfect for this run to continue. And we are going to see a major input into that contribution of the run by the non-farm payrolls report to be released in T-minus 27 minutes. So let's take a look at what what that non-farm payroll report is comprised of. Oh, here it is. I'm going to do it here on Forex Factory. It's slightly more informative on this point. Actual being less than, okay, let's talk about this. I don't really need to go here. I can talk about this later. Here is what we need to know about the report and its mechanics. And this I say to you as a hypothetical response and reaction and process of the report. Let me be specific in the interest of full disclosure and state there's a risk here. There's a risk that it won't work out according to the hypothetical textbook situation. So we're going to talk about those in a minute as well. But here's how it works in theory. We are expecting 212,000 jobs to be added in itself an economic phenomenon. Again, it's all relative. The recovery that's been underway robustly since inflation has been reined in and the pandemic has been suppressed. If we get a report that's reasonably close to 212, 210, 220, or greater, that is going to indicate to the Forex markets a strengthening in the U.S. dollar, because it'll mean the economy is strong, that investments in the United States are likely to continue being profitable, and that for the time being, for the foreseeable future, the only major engine in the world economy is the U.S., and the world economy is the U.S. Germany is in recession. The UK is in recession. The Chinese are in a funk that they're not going to get out of for many years until they clean up their awful banking sector, which is underwater and in the toilet because it's underwritten so much housing they can't even use it. There are tens of vacant cities in China that have been built, asphalt-laid, clinics and hospitals and schools and you name it are all in place except they're empty because they can't be habitated because the financial institute, the building trades overbuilt. So China is on the ropes as well, and America is eating everybody's breakfast. So this economy remains strong. What can happen? Well, let's take a look. If the I'm not done. Let's get ahead of myself. I could get excited, and let me say a note about getting excited in these. This is one of the most fun and exciting economic event there is. Most of trading involves just sitting around watching the screen, trying to listen to the news, trying to see if you can pick up a development that's about to happen or is underway, hook your little account to the engine of that development, and try and make a few dollars. This is not like that. Everybody sits and waits, holds their hands. You don't have to have an opinion, think ahead, predict, speculate. All you have to do is watch and wait. And how do we watch and wait? When the report is released, we'll see it print out in black, which means it's exactly 212,000, highly unlikely event. Or it'll print out in green, which means that the number was larger than this, and green meaning indicating a positive strengthening effect on the dollar, or red if it prints out less than 212, meaning a weakening situation. That's the theory. However, we do not trade based on the theory. Why? Here are a few possible risks in there. The report comes out as expected, and the market does nothing. I've seen it. I've seen it more than 5 times in the last 3 years. It happens. Don't ask me for explanations. I'm not that smart. I can only tell you what I know, what I see, what I expect. I can't tell you why. And I'll tell you something else. Neither can the commentary. Speak though they do. A lot of these commentators don't trade. They have trading accounts. They don't know what it's like to trade. They have no idea about the emotionality and the causality involved in the markets. They just tell you something that sounds good and move on. That's all there is to it. We, on the other hand, have our hard-earned money in this market. We have to be a little more particular than they do. So, Another possibility is that the report comes out negative, positive rather, and the market does the opposite, or it comes out negative and the market does the opposite. We've seen this before, and that requires an entirely different mindset when it comes to taking the trade. Most of the time, speaking personally, if it reacts in a way that I don't grasp, I don't take the trade. I'm a conservative trader. While I have an appetite for risk, I don't court it to open, try to avoid risk. But in our business, it's not wholly unavoidable. Another risk is that service channel happens. It's not an all-time steam-powered risk. It's one that happens. It can still happen in the event of a surge of demand on servers. They glom up. You don't get filled. It happens, and it's part of business. It's the cost of doing business. There's nothing we can do about that either. So when the report comes out, we do not trade based on that. We trade based on this. We make sure they're all 1 minutized. That's right. These are the major trading pairs, the ones that are the most affected by the results of the report. The dollar pairs: Aussie dollar, euro dollar, pound dollar, dollar yen, dollar Swiss, dollar CAD. Notice that they're paired and in a particular order. Dollar on the left, dollar on the right. They're separate. Why is that? Because these live trading events are a great deal of fun. They're very exciting. They're full of action, and they're really easy to mis-execute. So in order to avoid mis-execution, we at least try to keep our trading views organized so they're not overwhelming and confusing. So too with the trading platform. I want you to make sure you're logged in. You need to be live. You don't want to be, see a great opportunity, and all of a sudden you're ready to go and log in, and time goes, and you lose an opportunity. Because sometimes, well, I don't know what the distribution on this is. A lot of the times, these trades don't last long. They pop, and then within a fairly short time, they revert. So they can have themselves a 50, 60, 40 pip move, only to revert in a very short time. So if you didn't get into that trade, if you don't have a trigger finger, you're going to miss it. On the other hand, some of these trades are so good. 2 months ago, we had a trade that persisted for over 2 weeks. Profitable despite the overnight holding fees on these positions for over 2 weeks. Rare, but happens. We are in fantastic trading environments right now, where things are positive, things are growing, things are volatile, and there's a lot of opportunity. Just by the way, I have upped my volume. I want to take 5 lot positions in these trades because I am anticipating great action. And if it does make itself a 30, 50, 70, 100 pip move, and I've seen more than 100 in the last quarter of the year, there's a lot of money on the table that can be taken off fairly easy. So I want you to understand that the trade, the platform has to be logged in. We're going to T-minus 16 minutes and counting before the release. And we're going to watch carefully on the live real-time 1 minute charts of the actual reaction. Now, I want you to notice that, remember, these are 1 minute charts. I don't normally focus on 1 minute charts. They're too fine-grained. However, in this event, we do. And I want you to notice that in the case of the euro dollar and usually the dollar yen, no, not so much today, euro dollar and a little bit in dollar Swiss. Let me just make a digression and say that it is understood that the dollar yen euro dollar trade itself is the most economical. It's the most affordable, has the lowest overhead costs, and so I like to trade those just by virtue of the fact that they're cheap, and I like a value when I trade. But mostly we're motivated by what moves. Not all the time do the cheapest, most value holding assets move. Sometimes other ways. Pardon me. Now, what I wanted to emphasize is this. We will often see, as a prelude to the release of the report, action which indicates a real directionality. We don't pay any attention to that. These are rookies and wannabes and newbies who are trying to outguess and second-guess the market. We don't follow them because they're always wrong. We don't care what they do. We don't see what they do. We just wait and see until the report's released. And then once we see a discernible pattern in the market, and the reason I say a discernible pattern in the market, because this reaction on the report printout is not necessarily the reaction of the market. You can't trade some sort of hypothetical result on a calendar. No, we have to go along with the markets. The trend is our friend. We cannot buck the trend. Oh, the report was positive. Oh, it should be strengthening. I see the market doesn't see that, but I'll go along with what I know. That's not how to trade. That's how to lose money. I'm in the business of losing money, in the business of taking more money out of the market than we put in. But let me say, in the interest of full disclosure, put in we will. Nobody plays this game without losing. We all lose. We lose plenty. But the sine qua non, the paradigmatic sign of success in this business is taking more out of the market than you put in. As I say, put in you will. Anybody who tells you otherwise is not fooling you, or lying to you. And that goes, by the way, for any of the sports, commerce, professionalism. Nobody does anything successfully all the time. They do, they don't do very much. They're risk averse. People who are willing to engender the risk of failure do fail. Now they turn those losses into partial losses because they learn something from it. If they made a trade that wasn't good, they try to understand what got them into the trade, what motivated them, what was correct, what's wrong. They try to set themselves up so to avoid those circumstances in the future. That is what takes a loss to being a gain. If you're an athlete, well, you get the idea. Any questions? I didn't know that I speak rapidly. T-minus 13 minutes and counting. And let me say, if I can, I didn't really prepare anything on this, but I could show you perhaps. If we go, if we go to, let's just take euro dollar for example. I want to go back to the beginning of March. Here's April. Well, no, I don't want to do it. It's going to take too much time. They have been moved. No, I don't want to waste your time with this. During these reports, we have seen movement over 12 to 15 minutes. 100 pip moves, 12 to 15 minutes. You don't get opportunities like that every day. These are rare, fantastic, and I speak to you as a registered and licensed securities dealer. We should be prepared to take large positions and exploit this opportunity. These opportunities are rare. Again, they're not guaranteed. But what we have been seeing in the past quarter of a year, maybe 8 months, is stupendous. And the opportunities to make money are enormous. You do have to have the guts to put your money into the market at these episodes. No guts, no glory. Risk is. There's always a risk involved here. We mentioned the risk specifically. The potential outweighs the risk. Yeah, there's risk in all of this. This is the capital markets. Nothing is determined. This is a probabilistic world we live in. We say that in 80% of the time when nothing such happens, so and so will occur. It's true, statistically. The problem is in any particular time, we don't know if it's 80% or 20%. So yeah, there's risk here. But the potential is enormous. That sound is not great. Lots of background noise and keeps cutting out. Can you check the microphone? I'm doing the best I can. I hope this is better, Tracy. How is it? Okay. So yeah, there's risk, and if you don't have the stomach for risk, this is not the business for you. If, on the other hand, you've got the stomach for risk, and you can put your hard-earned money on the line, let me tell you, the opportunities in the last 3, 5, 8 months are outstanding. Outstanding. And I hope we'll see that today. Maybe yes, maybe no. With T-minus 11 minutes and counting, non-farm payrolls, we're expecting 212,000 at least. Oh, yes. comes to mind that, let me take a look at this. These effects have been so outstanding in the last, we'll call it quarter of a year, that the effects are not only in the FX market. They actually exist and can be seen in the indices. So if we look at the S&P 500, which we looked at before, I don't know why I'm fooling around like this, because I'm getting excited and nervous, that's why. If we look at the S&P 500, and you see it's been up and away, the indices themselves have been affected because the robustness of these reports is just making corporate incomes fabulous. And so therefore, the S&P 500, NASDAQ, the Dow are all legitimate trading opportunities for this report. Necessarily, not guaranteed, but likely. Barbara asks, does this affect gold as well? I would say no. That's my reaction. I don't trade. I don't look, Barbara. It could. And if you feel that there's something, keep your eye on it. Take a position. By all means, yes. Hope I've answered your question. All right, we're coming in on 8 minutes now, and we've got a wide range of possibilities. Never mind, it could go negative. However, I want to point out, in the event of a negative report, there are opportunities as well. If this report comes out, say, 175,000, still not exactly a negative. But let's say, remember, these positions and the reactions to these positions are all based on expectation. If the expectation is disappointing, or rather, if the outcome is disappointing relative to the expectation, there's still money to be made trading these because we can trade them on the short side. So it's just the reason this is such a huge opportunity is because there are so many people from around the world tuned into this, having their money on the table, ready to trade, that even if the outcome is not as expected, there's money to be made. That is why, and I'll repeat this phrase, that is why don't trade on this line. We trade on not this miasma of data, but on this set of it. We trade the currency. Any questions, ladies and gentlemen? T-minus about 6 minutes, I guess, now and counting, 7 minutes and counting. And we're looking at a potential 212,000, possibly more, likely more. And regardless of the outcome, there are so many attendees in our room today. We have a good turnout today, as well as other rooms and other people from around the trading planet watching this happen. There are oodles of cash out there waiting to pile into this, and that's what drives the market. Trading expectation, the trading excitement, that's what drives this event, and that is one of the reasons it can be so lucrative. Questions, ladies and gentlemen? Irving asks, is it like this every month? Well, I would say, yeah, Irv. In the last 8 months, it has been wild. It's been fantastic, yeah. So there's no doubt about it that it has. T-minus 6 minutes and counting. Yeah, it has been really a wild ride. Not necessarily so, of course. There are no guarantees in this capital market. But yeah, you always see these admonitions that the past is no indicator of the future. That's lawyer talk. The past is the only indication of the future we have, and it's damn good sometimes. We're in one of those positions now where the past is an excellent indicator of the future. No guarantees. Yeah. So I think this is going to be, and myself and others as well, think this is going to be a big deal. Hope I've answered your questions. 5 minutes and counting. Let's just make sure we're logged in. That's something you all need to do. And I just test this by seeing if it goes to sell or buy. Excuse me, it doesn't. So as I say, it doesn't tell me to log in. So I'm logged in. I'm ready to go. I want you to be ready to take these positions when they occur. So make sure the platform is logged in and ready to roll. I mentioned this before. I'll mention it again too. I think this is worthwhile. I've upped my position to 5 lots. Now, yeah, this depends on your trading size, and we won't get into the discussion of risk management and position sizing. However, let me just state the general rule of thumb. Like this, so much potential. You want to be able to take the largest position you can afford, reasonably afford. Have some money available in more money in the available in the account than you normally would have. You should take a larger position than you normally take. The potential here is rich. So we'll leave it at that. Oh yes, with respect to stops, I do not trade with stops in the live event, so I normally do use stops and have myself because in one simple reason, this happens fast. We don't use stops. We're gonna take these trades with no saddle. We're gonna ride this baby no saddle because we don't have time to start calculating and analyzing and doing the kinds of work we normally would do to determine a reasonable entry and exit. No, rather either jump on the horse and run with it, get off when we have to, or stay on the horse and rake in the profit. So no, I do not use stops on a live event like today. Hope I answered your question. Tracy asks, just to confirm, Aussie CAD? I doubt it. No, I wouldn't. I would say, Tracy, there's no Aussie CAD trade available because it's not. This would affect the dollar, the U.S. dollar, the greenback. And so, I mean, I would say theoretically it's possible, but I would say practically it's highly unlikely. These are the ones we want to look at again, team. Aussie dollar, maybe you meant Aussie dollar. Sorry. I could be wrong. Aussie CAD, I would say unlikely. Aussie dollar, euro dollar, pound dollar, dollar yen, dollar Swiss, dollar CAD. Furthermore, on my favorites on the trading platform with T-minus 3 minutes and counting, I have in my favorites Aussie dollar, euro dollar, pound dollar, dollar CAD, dollar Swiss, dollar yen. Again, that same grouping. So at least I have give myself as much possibility as I can of not mis-executing. Mis-executing is a major risk in these live events because it's so exciting and so electrifying. It's really easy to mess up. So try to keep clear in your mind what you want to buy and what you want to sell when we see the outcomes and the patterns visible on the charts. Right? Okay, we're on they're moving. Okay, here's what I was talking about. We've got this nervous movement right before. We're not going to pay attention to this because generally speaking, these people don't know what they're doing. So we're now T-minus 2 minutes and counting. My system clock indicates 3 minutes and 10 seconds. No, excuse me, 2 minutes and 10 seconds, more or less. I will tell you, of course, that this is the absolute longest 1 minute in the trading. Never end, but okay, 1 minute, T-minus 1 minute and counting. All right, let's get going. We're ready to roll. We're looking for 212. Anything around or greater than 212 is likely to send the U.S. dollar stronger. Stronger U.S. dollar means we're going to buy dollar yen, sell euro dollar. Yeah, let's see. Any other questions, ladies and gentlemen? Feel free to ask. Okay. My system clock indicates 1 minute and 20 seconds. You never know. My Timex indicates about the same. It's always stressful, you know. It's always exciting. It's always a little bit of electricity in the air when you get to this stage. I love this, but I guess you might say I'm an adrenaline addict. I don't know. I generally consider myself really calm, but it is exciting. What can I tell you? I'm too old for roller coasters, but this is as close as it gets. Non-farm payroll. March numbers coming out in April 5th today. 212 expectation. Okay, we're ready to roll. Okay, T-minus under 1 minute and counting, ladies and gentlemen. We're ready to go live. $212 expectation, equal to or greater than. We're going to look for strength in the dollar. We're going to watch the market as it reacts, And then we're going to trade, and we're going to trade as big as we can afford because these are likely to be serious moves. Okay, my system clock indicates 8 seconds and counting. There's always some latency too, by the way. It comes out later, earlier. This is here we go. 300,000. Big news, ladies and gentlemen. Big news. Huge, huge drop. We're in. We're buying dollar yen. We're selling euro dollar. It's big and it's here, and we're buying. We're buying dollar yen. Move up the lots to 5. We're buying dollar yen, and we're selling euro dollar. It's big, it's positive, and it is wild. We're selling euro dollar, we're buying dollar yen. I'm in for 5. Euro dollar sell, and we're taking the order. All right, we're in for 2 positions. And it's ba-ba-ba-boom, ladies and gentlemen. Ba-ba-ba-boom. Take a look at those charts. Just stupendous. The euro dollar on my chart seems to be stalled. We'll get back to it in a moment. No feed there. But dollar yen and Aussie dollar are on the move on my chart. So is dollar CAD. Big time, ladies and gentlemen. Big time. That's a huge, huge outcome on this report. Huge outcome. We've got a huge outcome. Look at this. 300, that's 30% premium on expectation. I can't imagine what kind of money we're going to be making on this, but let's have a look. Okay, it's giving back a little. It's giving back a little, but in a massive move like this, ladies and gentlemen, we're going to hold on to this position for a bit. We're going to exit it immediately, even if it gives back a little. This is going to likely persist over the weekend. It's very likely that holding these positions over the weekend, despite the relative expense of doing so, is going to be worthwhile because of the strength of the outcome. Dollar yen is doing great. Euro dollar is not showing anything on my chart for some wacky reason. I find that annoying, but avoidable. Avoidable in terms of caring about it. Let's see how the positions are doing. Okay, the euro dollar is in profit, and my 2 positions are in profit nicely. So far, so good. So far, so good. We're in profit in those positions and expect to do so for some time. Anybody take the Aussie dollar trade? I missed the Aussie dollar. That might be look like it's worth getting into again now. Dollar CAD is looking good. All of these positions are looking fantastic, ladies and gentlemen. Let's take some more. Let's fill them up. I'm going to take the Aussie CAD position, the dollar CAD position myself. That's looking good. I'm going to take advantage of that. Dollar CAD up. Buy 1 lot because I came in late. Buy the dollar CAD. I'm going to sell the Aussie dollar. Let's just make sure I'm not making any mistakes. That's the Aussie dollar sell. I'm going to sell the Aussie dollar. Yes, sirree. I am going to take as many positions as I can afford today. This is a fantastic opportunity, ladies and gentlemen. An unusual opportunity to get in and really clean up. Took euro dollars as PNR. Excellent work, sir. Excellent work. Excellent work. Yeah, they're holding. They're holding up nicely. I don't know how long I'm going to stay with you today, ladies and gentlemen. This is going to persist for the weekend, I'm sure. I am going to probably end the session in a few minutes, but let me just say, it's still not too late to get in on this. It's still not too late. This is not. This is going to have legs. And what I mean by that is if you get in now, it's still going to be paying money by the end of the day, in all probability. And I dare say it's going to be paying money on Monday morning as well. Huge outcome, very positive outcome. 300,000, we expected 215, 218. Let me just give you we expected 218. We got 300. That's a percentage change of 37.61%, ladies and gentlemen. You don't see that kind of episodic power every month. That is a fantastic outcome, and we're going to ride that. We're going to ride this baby for a while now. Okay, we're giving back a little bit, but do not be dissuaded by the fact that the market's giving back a little. It takes a little breather. You know, it ran such a sprint so quickly that the market's a little short of breath. People want to get out there a little, make some money, you know how it is. But the more serious, the more determined, the more practiced traders are going to hold on to this position, because it's going, this little reversal of a minute or three is irrelevant compared to what the potential for this move really is. Questions, ladies and gentlemen. Let's open up the floor to some questions. Anybody? Barbara asks, how long will the trade continue? I can't say, Barbara, but it looks to me like it'll be healthy well into next week. Healthy well into next week. My feeling, I could be wrong. Okay, ladies and gentlemen, doing okay so far. Far so good. All right, ladies and gentlemen, if there are no more questions, let me just summarize by saying the following. We had a report was 37% better than expected. 37% above 212,000. It's a huge amount in and of itself. It went over above 300,000 new jobs. That indicates tremendous robustness, tremendous vigor in the U.S. market, and therefore likely made the dollar stronger. And it's going to, in fact, let's take a look. Let's see if it has. Oh, it's a little early yet for the U.S. market. But it's very likely that this market is going to go up as well. Let's drill down and take a look at a 15-minute chart. Yeah, it's got a little bit of activity, not so much because it's early day. It's early in the market in the U.S. It's still pre-market open, but we think this is going to go. It definitely has legs. It's taking a little bit of a breather here, but the directionality is strong and likely to continue. Now, can I ask, why do you think the euro dollar ran up prior to the announcement? I never know that, sir. My guess is absolute coincidence. Pure and simple. The people who get into these positions, and I don't know. My euro dollar is not reacting, so I don't know what that is. I just can't, you know. Oh, euro dollar on the 5-minute. It doesn't seem to be moving. I can't really get a handle on what's going on here. There's some flaw. I don't know, and I don't care. But if it runs up prior to the announcement, Lucinda says sell Aussie dollar and intraday or all under time frame. Sell Aussie dollar, intraday, all. I don't know what all or intraday means, Lucinda. Sorry. I just don't know what sell intraday or all. Sell it, just sell it. And oh, you mean how long to stay in it? Is that what you mean, ma'am? Tell me what you mean by all or intraday. You could hold this, you could certainly hold this intraday, but I would recommend holding it overnight because it is a very powerful move and likely to continue so. So, ladies and gentlemen, you get the idea. I'm not going to belabor the session any longer. It's T plus 10 minutes now. But again, this has been an unusually fantastic opportunity for all of us today. And I hope that you profited. I might have slipped back a little bit, but they'll come back. I'm not letting them go so fast. They will be back for certain, in my opinion. I could be wrong. Good. I'm glad to listen to this. And I am going to say, ladies and gentlemen, on behalf of the staff and the management here at Banks of Trading, we are always humbled and gratified by your continuing patronage of us as your online broker. We do the best we can for our people. Not right all the time. We do the best we can, and we hope that this is an example of the quality of work we give to our clients. And so let me say that I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. My pleasure, man.